As you hear, this meeting is being recorded, and welcome everybody. I am Lorene Young. I am a director with CAMCO, and again, this meeting is being recorded and it will be posted on the company's website and the YouTube channel. I would like to introduce you to the board roundtable presentation. Tonight's topic is insurance claims, and our presenter is Kevin Snakard, and he is with Assured Partners. So again, welcome everybody. And Kevin, you are welcome to start.
Okay, sounds good. Well, you never know how many people are going to attend, so it seems like we have a pretty good turnout, which is nice. So my name is Kevin Snakard. I'm with Assured Partners, and I'll kind of flip through real quick. This is going to be the real quick intro. Assured Partners is a large national brokerage, but we have offices all over the country, and right here in the Philadelphia area. And I've worked with community associations now for 29 years. I'm coming up on my 30 years. And so what that means is I've worked with condominium, homeowner associations, master associations, specifically over that period of time as a primary niche market that I've focused in. So with that said, my background, certified CIC, CRM, a certified insurance counselor, certified risk manager. But like I said, I've written numerous articles. I'm part of CAI, which is Community Association Institute, Delaware chapter, and that's where I sat on their communications committee, where they publish a magazine every other month. Also I've spoken on and sat on different panels over the years regarding different insurance discussions. So with that said, I've also seen many claims, but today's focus really, you can't really talk about claims in a very general term in an hour. Our focus tonight really is property claims. So it really involves damage inside a unit, right? Or damage to a building affecting a unit. And your homeowner's insurance policy, the association policy, and who's responsible for what. And also, what's the process, right? What is the process for the homeowner? What's the process for the association? And, you know, unfortunately, I deal with this daily. So it's second nature for us. But for the homeowner who experiences the claim, might be their very first claim ever. Some associations don't deal with many claims at all. So for them, it could be a relatively new event or infrequent. So having that understanding, we're going to go over a lot of stuff tonight, and you'll probably say, okay, I get it. And then 6 months from now, you might say, wait, I'm not sure, how did that work again? But hopefully this at least gives you some things to put in the back of your mind so that when a claim does occur, that you're able to go back and say, wait a second, let me ask about this or ask about that. And that's really, I think, the point of it. You can't be expected to retain 100%. So the topic, we're going to talk about the current marketplace very briefly. Just want to bring you up to date on what does that mean? When I say current marketplace, we're talking the insurance marketplace for condominium and homeowner associations. Property claim process in an association, that's really the primary focus. Deductibles and the HO6 policy. Really, they kind of go together with the claim process. Subrogation between unit owners. I'm not going to get into explaining what that is now, but we will talk about that later. Subrogate, how claims impact pricing. Very important as an association and as board members that you understand how your claims impact pricing, right? And then trends, what do we see as trends in terms of insurance? What's happening with regards to what are associations doing with regards to their insurance programs? This is all focused on the property claims. So you have liability claims that are slip and falls. You have directors, officers liability claims. There's, you can go on and on. But again, keeping it narrowly focused here. So we talk about the current marketplace. Right now, we're in a firm to hard property and casualty insurance marketplace, meaning for property and liability coverage, pricing is increasing faster at a faster pace than it has in years past. For quite a few years, pricing was relatively flat, maybe 0, 1, 2%, 3% increases, somewhere in that range, depending on inflationary factors, building limit adjustments, things like that. But, you know, that's where we're seeing the rates increasing, both from property and casualty insurance, casualty being liability. I read an article this morning regarding this in particular in the insurance space, and that article referenced that the increases are flattening out. So it doesn't mean that prices are going to zero increases. It just means that the increases aren't increasing as fast as they had been. Typically, we've seen over the past year increases anywhere from a budgeting perspective. We've been telling associations on a good side, 6%, could be 10%, but that's kind of the range. And that's for accounts that don't have significant claims. So that's kind of what's happening in the marketplace. I think from also other factors that affect that are involved here are social inflation. So social inflation, I don't know how many people are familiar with the term, but from a liability perspective, it's important. It's something that I think you should be aware of. You know, what's happened is that the today are awarding higher amounts than they ever have, and in some cases are hiring more than the claimant's demand. And so when the juries tend today, right now, to be more claimant friendly than defendant friendly. So if you know it's hard to prove that you're innocent to a jury if you're an insurance company. So they're less inclined to want to go to a jury trial. So as a result, they're forced now to settle at higher amounts than they settled before. And that's a factor that the attorneys know. So that's a very real item there, social inflation. It's really impacting economically the insurance pricing. Catastrophes, we've had numerous losses. Catastrophes really are like the large, you know, your tornadoes, right? The hurricanes, all those kinds of things that have been driving the property side. So the social inflation drives the casualty side, and the catastrophes drive the property side. And then we also, the latest one that's going to be really, I think, we're going to have to really see how it pans out this year. But inflation, you know, it's hard to believe that inflation is temporary at all when wages have increased significantly. And so that's not going to go backwards. And so some things will regress and others won't. But how much is inflation going to change the value of your buildings, right? So how much is it, you know, your complex right now or last year was valued at, let's just call it $10 million if it cost that was the estimated replacement cost to rebuild those buildings. Well, if inflation's 6%, now it's up even higher at a faster clip than in the past. So inflation is going to drive building values up at a faster rate, and building values for condominium and homeowner associations is the driver in your pricing. And so as a result, that increase in building value also increases your price, even if the rate stayed the same, right? It's just a higher limit. Then you add rate increase on top of that. So if there's some leveling of rate increase, it may be offset somewhat by these inflationary factors. So it's going to be a tough one this year to figure out where that goes. If I knew, I'd be retired. But I don't understand. You know, it's a guessing game, and but you should be prepared for some increases there. So when we talk about the property claim process in an association, what this says here is, I'm just going to read it. The claim process for condominium associations and homeowner associations with residential building coverage is unique. So we're talking about two different things. We're talking about condominium associations, and we're talking about homeowner associations with residential building coverage. So they're basically insured like a condo, okay? But if you're in a community that's a homeowner association and you're not insuring the residential buildings, then this conversation probably is not a good conversation for you, because in those cases, the homeowner is responsible for insuring their entire home, and they buy a completely different policy, what we call an HO3 policy, and they insure the inside, outside of their home. And so if they have damage in their home, it's completely handled between them and their homeowner's insurance carrier. But there are many associations that are called XYZ Homeowner Association, but from an insurance perspective, they're insured just like a condo, where the association insures those buildings. And so that's what our focus is. And that's why with residential building coverage is underlined. So we said it's unique. Well, why is it unique? One, the process involves two insurance companies, right? We have the association insurance company, and we have the unit owner's insurance company. If you were a single family home in the middle of nowhere and you bought a homeowner's policy and you had a hurricane or a tornado, you would deal with one insurance company and yourself, and you would handle that claim, and there'd be two parties. In this case, we have the association insurance company and we have the unit owner's insurance company. The process also involves multiple parties. We have the unit owner, the association, the property manager, the unit owner's adjuster for their HO6 carrier, right? The person who's going to settle the claim for that homeowner's insurance policy, and the association adjuster who's going to settle the claim on behalf of the association's insurance policy. And this is why claims get confusing, because people aren't sure who's responsible for what, right? And so if you can give clear direction at the beginning of a claim, it makes a huge difference. But this is the exact reason why we're actually having this conversation tonight, because there's just so many parties involved. To understand the property claim process, you need to understand what is covered by the association policy and the HO6, or the unit owner's homeowner's insurance policy. We call it an HO6 policy. If any of you are living in a condo or a homeowner association where the association insures the residential buildings, you should have an HO6 policy. The association policy for condominium associations and homeowner associations with residential building coverage. One is responsible for covering damage that is in excess of the association deductible, the association property deductible, for the exterior of the building, the structure of the building, and the interior of the building, either as it was originally conveyed by the developer / builder, or as it was originally conveyed by the developer builder, as well as all improvements and betterments that have been made to the unit from the time it was originally conveyed. This is dictated by the association documents. So there's a lot right here. And what we're doing here is, when we write insurance for, I'm not going to keep saying condominium association and homeowner association with residential building coverage. That's way too much to say at once. So I'm just going to say condo, okay? Condo association, it means both. But so it's easily understood that the association policy covers the exterior of the building and the structure. But you should also know that almost every association today in Pennsylvania, falls under the Uniform Condominium Act, which I want to say is like 1981. Don't hold me to it. But that requires the insurance company, the association, to buy insurance rather for not only the exterior of the structure and the structure of the building, but also for the interior of the units as they were originally conveyed at a minimum. And then and that's spelled out in your documents as an association. And your documents may also take it one step further to say the association is also responsible for covering improvements and betterments. So when we write a policy for any one of your associations, it's not random how we arrive at if we're covering the interior at original grade or if we're covering your interior original spec plus improvements and betterments. We go to the documents to figure out how that's supposed to be written. So that's where it all derives from. And so hopefully that makes some sense. But keep in mind, whoops, went backwards. Right. So you just need to know from your association policy, number one, is our association insuring just the unit as it was originally conveyed by the developer? And when I say that, originally conveyed by the builder, we're talking about the first buyer, the person who bought that unit from the developer, went to closing, got the keys, and they walked in the unit, haven't moved anything in yet. It's in that condition that the association policy insures that unit. Now, over time, that unit could be bought and sold numerous times, and various owners upgrade the kitchen, and another owner upgrades the bathrooms, and someone else upgrades the flooring. Well, those upgrades, or what we call improvements and betterments, are not covered under the association policy if we are only insuring the original grade. They are covered if we're covering original grade and improvements and betterments, and we'll get into that in a minute. But that's what we mean by improvements and betterments, and what we mean by original spec. Unit owner's HO6 policy is responsible for covering damage to the unit that is below the association property deductible. This includes the exterior structure and interior of the unit. So your homeowner's insurance policy is, if the association policy has a property deductible, let's say $5,000. And we're going to go back a second. And we're right here at original, whoops. And let's just say we're covering original specifications in the unit only. Okay. So we're covering original specifications only. Your homeowner's policy, but the association is going to say, okay, we cover original specifications inside your unit. At a minute, we know that. But deductible is $5,000. So don't call us unless the damage is in excess of $5,000, because we're only going to pay anything above $5,000. Where do you go for that first $5,000? To original spec damage, to your HO6 homeowners insurance policy. Okay, and we're going to get into some examples, which will really break this down a lot more, and you can see the numbers. But that's where you go for that. So number one, your HO6 policy is responsible for covering damage that's below the association deductible, right? And two, your HO6 policy is responsible for covering improvements and betterments that have been made to the unit from the time it was originally conveyed, just as we explained, unless the association policy covers these improvements and betterments as well. Okay. And then other things that your HO6 policy cover are your personal property, like contents, loss of use to live somewhere else. Loss assessment, if you're assessed as part of a claim, if there's actually a covered loss where there's maybe not enough insurance coverage and all the homeowners are assessed equally for their share, or their proportionate share, that's what loss assessment covers. It's very, very rare, but it is important to have that coverage. Association property deductibles. So we talked about the fact that the association policy is not going to respond with coverage until the damage exceeds the deductible. I'm using 5,000 because it's just for consistency's sake. But association deductibles vary. 2,500 is really kind of almost low today. 5,000 is more on the norm, and 10,000 is really not unusual. So we're seeing more and more $5,000 and $10,000 deductibles than we are seeing the 2,500 anymore. But these deductibles on the association policy historically have been what we call per occurrence. So one deductible applies regardless of the number of units affected. So the easiest example would be there's a fire and an entire building is destroyed. And let's just say there's 6 units in that building. Well, one deductible applies for that loss. So if the damage to that building is $2 million to rebuild, they'd pay $2 million less the $5,000 deductible paid by the association policy, as long as that $2 million is only going to cover, if we're only covering original spec, it would cover original spec. Homeowners would be going to their HO6 carriers for improvements and betterments. And then that 5,000 gets split between unit owners for their share, however the association manages that. Okay. The more realistic claims are when we have water damage affects multiple units, and in a per occurrence deductible, still only one deductible would apply. And that one deductible would be split out between the units that were all affected, and typically it's done by proportionate share. But that's up to the association to decide, not our. We don't tell you how to do it. We do tell you what most associations do practice and how they do it, but that's really ultimately your call.
Is that typically within the governing documents? Like, let's say there was an occurrence and there were 5 units affected, but let's say in one unit, the damage was much less, like proportional damage in each of the units. Yeah. Would that typically how to divide that deductible rest with the board or rest within the governing documents, or how does that typically work?
Yeah, I won't. So I have to caveat, I'm an insurance broker, not an attorney. So I have to tell you, I can't give you legal advice on your docs. But what I would say, what we do see is that I would bet it's not in your docs. Okay, that's specific breakout of how to break out a deductible. However, most associations do practice the same process that we see. And I think consistency is probably one of the most important things you can do, right? And treat everyone equally, each claim the same way, so that it's fair at all times. But what we see most associations do is, if I had, let's just keep it to two units. One unit has $4,000 worth of damage, and another unit has $1,000 worth of damage. Well, that's a total of 5,000. So 4,000 is 80% of the loss, 1,000 is 20%. So one unit would be responsible for 20% of the deductible, and the other unit would be responsible for 80% of the deductible. And they would go to their HO6s for coverage for that portion of the deductible. If that makes sense. That's how most handle it today.
And if that's not in the governing documents, then it would be essentially the board that would be making that decision, voting on that as to how you're going to split the percentage.
Yeah, it's usually, I mean, you guys, I don't want to tell you how to operate as a board and making those decisions and voting. But in most cases, that's what we see happen. Yeah.
Okay, thank you.
The other deductible that's really that many of you may already have, and I am actually a very strong proponent of it, is the per unit deductibles. And so the per unit deductible applies separately to each unit affected. The most common per unit deductibles are per unit water damage deductibles. And so if we go back to the scenario of 2 units affected, $5,000 worth of damage, well, it's probably not the best example. Fine, let's just call it, let's say $10,000 worth of damage. But 2 units are affected. They each are going to have different amounts of damage, right? Odds are it's not going to be perfectly split 50-50. But secondly, one might be much more severe than another. And one unit owner might be ready to settle their claim and move on, while the more involved unit is still figuring out their claim. And but meanwhile, they need to figure out what the total amount is for each claim so they can split the deductible up. Well, in the per unit deductible, the same deductible, say it's $5,000, would apply to each unit affected. And so if each unit owner would go to their HO6 carrier, submit a claim, and each carrier would handle that on their own, and they'd say, listen, and each carrier would determine separately if the damage to that specific unit was over the deductible or not. And if it was, then we'd notify the insurance company. If it wasn't, then that claim would just be handled between the homeowner and their HO6 carrier. And we'll go into that a lot more, but that's really, I think, a great thing. It makes the claim process a lot easier. So here's a first example. A water pipe breaks, causing water damage to the drywall, paint, and flooring. Typical claim. All items damaged were original grade. Okay, so they were all items that were equal to what was put in, what was there when the unit was conveyed. The total amount of the damage was $9,000, and the association property deductible was $5,000. So now we know that number one, what was damaged was original grade, the total amount's $9,000, and the deductible is $5,000. Now we know how to break this claim out and who's paying what. Oops. So the HO6 policy, we know all the damage was original grade, so $9,000, the deductible is $5,000. Who's responsible for the first $5,000 worth of damage? The homeowner. So their HO6 pays the first $5,000, which is below the association deductible. Oftentimes when these claims occur, and the damage is is a perfect example, especially when it's a single, when you were a single unit claim like this, your HO6 adjuster is going to come out, look at the damage, and they're going to say, wow, this is $9,000 worth of damage here. What's the association deductible? And then that's where the manager, and for most of the associations that we work with, we provide a letter, and many associations have that information, and they provide the adjuster with the deductible. So deductible says, oh, the adjuster says, oh, okay, so the deductible is $5,000. And but all these items are original grade. In Pennsylvania, the association's primary for coverage if both policies have coverage. And as a result, once the damage exceeds the deductible, the HO6 carrier adjuster knows that the association's primary for that coverage. So the HO6 carrier will often just write a check to the homeowner and they're done. And then the association will settle out the claim for everything above that. And so in this case, the HO6 pays the first $5,000 of the 9, and the association policy pays the next $4,000 of the 9. And that's how the claim is paid. Now, when the association policy adjuster pays the claim, the named insured on your insurance policy is the association. So the claim check goes to the association, right? And then the association then provides those funds to the unit owner for their damages. So that was a single unit claim, right? Oops, getting this back.
Question?
Yeah.
Without getting too nuanced, is this water pipe located in the interior of the unit, or is it external to the unit but structurally, say, underneath the roof of the property, of the building?
Right.
Is that an issue?
That's a great, great question. That comes up all the time. And the first thing I always say is this is an insurance policy, not a maintenance policy. And so there's maintenance and there's insurance, and your documents will address maintenance separately from insurance. So when you mention, is this pipe a common area pipe, a common element? Is this a limited common element? Is this the unit owner's pipe under a sink? From an insurance perspective, we don't care. If that pipe were to break and we get water damage, that's a covered cause of loss, regardless of which pipe it is. But if, for instance, that pipe, for whatever reason, I don't know, needs to be replaced, there's problems and people have to replace these pipes, a unit owner from a maintenance perspective might say, oh, well, that's a common element pipe. That's not my responsibility to maintain it. That's the association's. And that's where that's a different conversation that we don't get involved with. So technically, a lot of people will think, well, that wasn't my pipe, or that was a common pipe, or that was the unit owner's pipe that broke. They're responsible. At the end of the day, it's still a covered cause of loss in the insurance world, and we are responsible for that damage. And so is the HO6 for any damage below the deductible. So you have to really keep that in mind. It's not it doesn't matter who owns the pipe.
Kevin, what I'm wondering about is that if two unit owners, one above and one below, and the upper unit is negligent as far as water damage goes, why does the homeowners association have to be involved with any payment of loss? This should not be. Why is that?
Is it Bill or William?
Bill, you can call me Bill.
Bill, okay. You're about 2 slides ahead.
Okay.
Hold that thought. And if I don't hit it exactly, bring it back up, but we're going to get there. That is.
I have a big question on subrogation too. I'm familiar with that.
And that's what we're going to talk about. But look, so I want to kind of walk you through step by step. The first example was one single claim. So this next example, water pipe breaks causing water damage to drywall, paint, flooring again, right? Happens all the time. Items damaged include original grade items as well as improvements and betterments that were made to the unit from the time it was originally conveyed. The association policy does not cover improvements and betterments in this situation, right? This association's documents are not responsible for covering improvements and betterments. The total amount of the damage is $16,000, $9,000 for original grade items, $7,000 for improvements and betterments, and the association property deductible is $5,000. So what does that tell me? Number one, I already know from an association perspective, we don't cover the improvements and betterments. So that $7,000, that's the homeowner's responsibility right off the bat. I also know that the homeowner is responsible for the damage below the association deductible. So that's $5,000. So technically, right, we should be seeing that the homeowner's policy is going to pay the $7,000 improvements and betterments and the $5,000 under the deductible, and that would leave the association with what? $4,000. So what happens? The HO6 policy pays $12,000, $5,000 for original grade items, and $7,000 for improvements and betterments. And then the association policy pays $4,000 for original grade items above the association deductible. Okay. Now, that's in a situation where the association does not cover improvements and betterments. If the association did cover them, that would look differently. Water pipe breaks in unit 301, causing damage to unit 301 and unit 201. So Bill, this is where we're going to get into that in a minute. Items damaged include original grade items as well as improvements and betterments that were made to the unit from the time that they were originally conveyed. That's a long-winded way of saying it, but we repeat it over and over again because it's important to understand. It goes back to when it was originally conveyed. The association policy does not cover improvements and betterments. The association property deductible is $5,000 per unit for water damage. So now any unit affected by one single water damage claim would be subject to its own $5,000 deductible. So the total amount of damage to unit 301 is $12,000, $9,000 for original grade items, $3,000 improvements and betterments. The unit 301 HO6 policy pays $8,000, $5,000 to cover the damage below the deductible of $5,000 per unit, and $3,000 for improvements and betterments. Right? That makes sense? The association policy pays $4,000 for items above the deductible for original grade items. So
Kevin, it's Rudy again. Quick question. Is the rationale for the homeowner paying the amount, the $5,000 because it's below the association deductible, is that to prevent morally hazardous behavior?
No, I don't know if that's, here's where that comes from is associations in general as a practice, and in some cases very specific, they don't want to get involved with claims inside a unit if it's below the deductible, number one. Number two, if there's damage in a unit, they don't feel that the association as a whole should be paying for that deductible for that unit owner for this because if the HO6 didn't pay it, the association would have to fund it. But really probably the biggest thing is that they realize that as opposed to the association paying the $5,000 deductible out of pocket, the HO6 policy covers it. And that's probably the biggest driver of why this has been this way now for honestly many years. And because the HO6 policy covers it, the unit owner would pay their deductible on their HO6, but the association and all the members aren't paying for someone's paying the portion of that $5,000 deductible out of the budget.
So is the implicit assumption that the homeowner HO6 deductible is identical to the association deductible? The 5,000? What am I missing here?
Let me say that again. No, the unit owner's deductible is going to be somewhere between $250, $500, or $1,000. I mean, that's whatever they decide to pick. That's their homeowner's policy.
So in these examples, the homeowner pays twice on the deductible. They pay the $500 under the association rules, but then they pay the $250, $300 under their unique homeowner policy.
I think when he's saying the condo owner, he's just meaning the condo owner's insurance and not the condo owner themselves.
So
who's paying? I mean, the money's coming, the cash is coming
Rudy,
out of
Rudy.
the homeowner's pocket, correct?
No,
Twice?
No. Okay, so let me backtrack to example one.
Sorry if I'm confusing people.
No, okay. So example one, water damage in a unit, original grade items, $9,000 worth of damage, association property deductible is $5,000. The HO6 policy, this is the homeowner's insurance carrier. Pick a company, pick an insurance company. Call it Travelers. Travelers says to the homeowner, okay, your deductible is $500. You're responsible for that. Here's a check for $4,500. Association policy then pays $4,000 for the difference between $5,000 and $9,000. So the homeowner would be out of pocket whatever deductible they have on their homeowner's insurance policy. That's it. Does that make sense?
I still don't understand why the homeowners association is getting involved with paying anything that's a unit owner's negligence. I don't understand
Okay.
that for 1 minute.
All right, well, Bill, we'll have to get to that in a minute. Okay, so let's go through the associated property deductible is $5,000 per unit for water damage. We already got into this one. So we talked about unit 301, $12,000 worth of damage, $9,000 original grade, $3,000 for improvements and betterments. The HO6 policy pays $8,000, $5,000 original grade, $3,000 improvements and betterments. and the association policy pays $4,000 for unit 3. So in this case, we're going to talk about, so in we're talking about unit 301, they had 12,000 worth of damage, 9,000 original grade, and 3,000 improvements and betterments. Their HO6 policy paid the 8,000, and the associated policy pays 4,000 because they only pay excess of 5 and 9 for the original grade items. If we go to the next page, unit 201 had 3,000 worth of damage, 2,000 for original grade items, 1,000 for improvements and betterments. The HO6 policy pays for damage below the deductible, which is 5,000. So that's the 2,000. And the improvements and betterments are not covered by the association policy, so they pay 1,000. So they pay the full 3,000, and the association policy pays 0 for unit 301 because there is no damage above the deductible.
So what you're saying is that by
Now, I'm moving into the next.
changing your policy by increasing your deductible on the homeowners association side, you get rid of all the other problems that you would have with them filing a claim against the homeowners association. Is that right?
Yeah. So what's driving higher deductibles today is the fact that two things. One, associations get frustrated and boards get frustrated because claims that occur inside the unit from someone's old hot water heater or washer hose or whatever are impacting the claims history on the association policy, which then drives up the price of the insurance due
Exactly.
to someone's lack of maintenance, right? And so you increase the deductible to $5,000 or $10,000, and now the homeowners are responsible for more that occurs inside their home, and that becomes their responsibility and not the association's responsibility.
So that's a good way to get rid of all the chargebacks to the association by increasing your deductible on the HOA side. Is that correct?
Chargebacks by, what do you mean by that?
Well, in other words, what I meant by chargeback is the homeowners association in this one case had to pay $4,000. So by increasing the deductibles on the homeowners association.
The homeowners association policy. So the association carrier paid $4,000, not the association, but that's a claim on the association's insurance policy.
Exactly what I said.
Of 4,000,
Exactly what I
right?
meant.
Okay, just want to make sure
Yeah.
everyone understands. And so, yes, now it becomes a claim on your loss run, and it now works negatively against you when you go out to market your insurance and try to get a better price.
Exactly.
Yep. So we talked about unit 201. There's only $3,000 worth of damage, all below the deductible, and we don't cover improvements and betterments. So everything's covered by the HO6 policy, and association policy pays 0 in this situation. So we go to so still in the third example. So when there is a claim that affects multiple units, this is really important that as when we talked about early on, we have lots of parties involved. It's easy when it's a 1 unit, 1 claim scenario. When you have multiple unit owners, it's really important that people have the right direction, right? So when there is a claim that affects multiple units, each unit owner affected needs to submit a claim to their HO6 insurance company. Each HO6 insurer or insurance company will work with their unit owner to resolve their respective claim. If the HO6 carrier for the unit that was the recipient of the water, so this is Bill, is what we're going to get into subrogation. Unit, in this case, unit 201's downstairs, they got the water from unit 301. If the HO6 carrier for unit 201 below feels that there was negligence of the unit where the water emanated from, you mean unit 301, then that HO6 carrier can try to subrogate against 301. Whether or not they are successful will have to be determined by the 2 HO6 insurers. However, in most cases, from my experience, I have seen it happen where there is some subrogation, but in most cases, there is really not negligence of the unit owner where the water emanated from, and the HO6 carriers each handle their claims separately, and there is no subrogation. But I have seen situations where there was true gross negligence from above, and they were successful on subrogation. But that's handled between the HO6 carriers. It should be handled between the HO6 carriers. It should not be handled between the unit owners.
So what is the
Chairman?
difference? What is the difference between negligence and fail to maintain your unit? Where's that fine line?
Right. So I mean, for instance, if what we see happen is that a pipe will break in a wall or under a dishwasher, and no one knows. I mean, no one pulls their dishwasher out every week to inspect the pipes. You just can't do it, right? So things can happen, you know, and it's not that someone failed to maintain it. That's why we buy insurance, you know. So there are those situations that occur. In most cases, those are the typical kind of claims. But if someone were to fill their sink with water and start running water and then go take a nap, and the water overflows the sink and pours into the unit down below, and they end up with all this damage below, and the unit owner upstairs is sleeping. We had that situation happen, and the unit owner below was successful in that subrogation. But again, it goes back, it's between those two carriers. But no one knows. I mean, you can't, pipes are behind walls and things like that. So it's sometimes very hard to know when a pipe is going to go. I mean, no one knows, right, on those situations, and hopefully it doesn't happen. But that's what so when we refer to subrogation, the key here is that each unit owner goes to their homeowners insurance carriers, and their HO6 insurance adjusters handle the claims, and they decide whether there's a chance for subrogation or not. And they may try.
Is there ever an instance where the damage is so great where the association's insurance carrier can sue a unit owner, subrogate to a unit owner?
Now, that's a very good question. So right here, this example we were just talking about is from one unit owner to another unit owner.
Right.
And it's very hard to do, like I said. But in your situation, I think it's Marvin, I think that was talking.
Yes.
In your situation, is the association able to subrogate against the unit owner? And that's a no. Right, that goes back to uniform.
Even for negligence? Outright negligence?
Well, in our world, we look at it and say, what do you call negligence, right? Everyone thinks people say, oh, they were negligent. Well, you can say someone's negligent, but what does that really mean? And where can you prove it? And at the same time, under the Uniform Condominium Act, we can't even subrogate against the unit owner, right? It would have to be an intentional act, so no, we can't subrogate against the unit owner, and that's there for your protection, because you're an owner in the association. You're paying a portion of your dues for this premium to insure your home, and if something happens, you've paid the premium. You're part of that policy to fix your unit or your building, and then you don't want the association to be able to come back and then sue you for $3 million to rebuild a building, and subrogate against you for that. So that's why it exists. It's not. So that's a very distinct item of waiver of subrogation exists, where the association can't subrogate against the homeowner. And it's really for your protection as an owner. But you want that. You really don't want an association to be able to subrogate against the homeowner. But how the claim process should work, I'm going to try to move quickly because I don't know how much time we have here.
Yeah, we don't have a lot more time. We do have some
Yeah.
questions coming up on the chat, but I'm not sure how much we're going to be able to get to.
Yeah, so let me do this. So we already talked about it. Bottom line is, if there's damage in a unit and it's small, the homeowner should be directed. This is really important. The homeowner should be directed to report a claim to their HO6 carrier. Their adjuster should adjust the loss. And if they determine that the damage is in excess of deductible, then they should submit a claim to the insurance company. We shouldn't submit every claim to the insurance company because, number one, I'm going to skip this part here. This doesn't really, I'm not going to get into price. Well, because here's the part. Your claims impact pricing. If I submit every time someone has water damage in their unit and it's below the deductible, and we end up paying zero under the association policy, it's still going to show up if I report it as a claim. And it's going to say, for instance, water damage, zero pay. And I do it again, water damage, zero pay. If I do that 4 times a year, times that by 5 years, I've got 20 water damage claims reported with zero pay. Sounds good, right? Nothing paid. The problem is the underwriters look at 2 things. They look at frequency and they look at severity. So severity might be low, but there's a high frequency, and that's a problem. And so you don't want to have a high frequency. And then let's just say I have a high frequency, even though there's small claims or zero, then I get hit with a large loss. Now I've got high frequency and a severe claim. You're looking at, that's when associations get their insurance non-renewed, right? And pricing goes way up. So it's important that homeowners follow the protocol on smaller claims to go through their HO6 carrier first and let them determine if the damage is going to exceed the deductible or not. And if it doesn't, then that claim is between them and the unit owner, and no one else needs to be involved. The manager doesn't need to be involved. The board doesn't need to be involved, and they should handle that on their own. So that's that. And then just real quick, trends, we talked about to reduce the number of claims that occur in the unit from being paid by the association. Many associations are increasing deductibles to $5,000 and $10,000. Adding per unit water damage deductibles does a lot of things. One, it makes the claim process easier for the unit owners. They don't have to worry about getting a split up deductible and what's their proportionate share, and they can handle their claim on their own directly with the HO6 carrier and move on. Makes the claim process easier for the board and the manager. Minimizes the potential for a severe claim because now less gets paid, and usually provides a premium reduction, uses a credit. And that was my fast wrap up.
Okay, we have some questions in the chat we want to try to get to in the last couple of minutes here. One of the questions is, how do you determine what the condition is when it was originally conveyed from the developer?
Yeah, that's a hard one, but typically, so what most carriers will do, they may look at other units. If you happen to be in a newer association, I always tell people, if you're the first one to buy the unit, whatever your agreement of sale was with all the options you picked, put it in the safety deposit box. You know, that's the best thing to do. Otherwise, they're going to try to go by what's standard in most other units. And they'll try to find units that haven't been upgraded either and see what they look like.
One of the other questions in the chat was, in the case of fire that damages multiple units, and the responsibility for units other than the one in which the fire started, is that determined by the fire department's investigation?
Yeah, I mean, when there's a fire loss, particularly a large fire loss, yeah, that goes back to the fire marshal. They'll decide. They a lot of times sometimes it's undetermined. Other times they can figure out what the cause of the loss was, cause of the fire was. Yeah. But they're the ones who do that.
One more question in the chat is, what happens if the unit is vacant?
If it's vacant, yeah, I mean, that's a problem. You know, you need to make sure that the heat's maintained. Ideally, someone's checking in on the unit if possible, if it's not occupied. But yeah, that's without those things, you have the potential for frozen pipes and other things that can occur and cause a loss that basically then impacts the rest of the association, right? Because the association policy has to pay for damage above the deductible.
And Kevin, in the case like we have a foreclosure in our development, and we have notified the trustees of the estate and also the foreclosure company that they need to get and inspect this because it's been like vacant for a couple of years. Yeah. Now, if we've notified them and asked them to inspect this home and make sure everything is winterized, and they haven't done it, then what is the ramifications of that to the association when they have done their due diligence to follow up with the foreclosure people?
I know I've seen it. I've had it happen. It's a battle. Sometimes there can be some success going and collecting against the bank. But it's like fighting City Hall. It's hard. And ultimately it could just end up becoming your claim. Main thing in those situations is that the water's turned off to the unit, right? Because water damage is probably the biggest thing that can occur there. And the other thing is that make sure that, not likely, but that you don't have people coming in there and out of there that shouldn't be coming in and out of there.
So thank you everybody for attending. I'm sorry if you have any other questions that we weren't able to get to, but if you think of something as you're thinking about this presentation tonight, I put Kevin's email in the chat, which is kevin.snakard@assuredpartners.com. And we will make this presentation available to everybody who was not able to attend today. And upcoming for our next CAMCO board events, we have a new board member orientation, which is going to happen on the 26th at 6 p.m. And the next board member roundtable is going to happen on February 8th at 6 p.m. And that's with Tony Campisi. And we will be sending out additional invites for the remainder of the year. And if you have any other questions, anything like that, feel free to send those over to Kevin. And Kevin, I don't know if you have any last words before we end.
No, that's great. Thank you for everyone for attending.
Thank you, Kevin.
Thank you.
Thank you.
Thank you, everybody,
Thank
for
you.
attending. Have a lovely night.
You
Thanks.
too.
Thank you.
Night.
Thanks, Laureen.
Thank you.